just remind us behind all of this why Alibaba is so acquisitive.
Well, I can't answer that. But I think it is worth noting how acquisitive Alibaba is. Why they're taking an online retailer with a big shipping business that's off balance sheet and then buying an offline retailer. To me, it doesn't seem to make a great deal of sense. It does seem that they try things. Amazon's trying a few retail stores. Yeah. Now Alibaba goes in. But I think one of the things to pay attention to is the volume of deals. I'm usually the guy who's saying, pay attention to one little thing at a time, and certainly do that. But they have done so many deals. We went through today, what did I figure, 98 acquisitions announced in the last 5 years, 98. Wow. They have spent, I tweeted this out to it, $42 billion at Cory TV. You can find me on Twitter. But $42 billion to do 98 deals. If you look at this chart, hence the chart. In fact, if you click on that yellow line there on your computer, it'll illuminate a little better so the viewers can see it. Maybe, a little better, tiny bit. But these are the size of the deals. Yeah. And this is the number of deals that they're doing every quarter. So these guys are doing so many acquisitions. I'm not saying it's a roll-up, but it looks a lot like a roll-up. And it's hard to imagine a company that's able to do so well with so many moving pieces. And these are just the deals that we know about. They also do some deals that they list in their financial filings that are too small to mention. But the fact that they spent $42 billion and 98 deals over the course of 5 years suggests that there's a lot of parts of Alibaba that are still in the process of integration. And those kinds of things can be very difficult for a company. And it indeed has been many companies before them have fallen with these kinds of acquisitions. Now, companies like Cisco are the rare exception when they've done very well with these things. But companies that do so many acquisitions often have problems with them.
Let's get an Asian take now, because we can go out to Bloomberg Managing Editor of Asia Technology, Peter Elstrom, joining us live from Tokyo. Can you reason with us why they are splashing so much cash, particularly in the offline world?
Sure. Well, I can explain as much as I know about that. Yes, they have been very acquisitive. They've been trying a lot of different kinds of deals in video, in games, in all sorts of different areas, and in offline retail. I'd say the difference is that China's retail market is much more fragmented and much less efficient than, say, the U.S. market, and they see an opportunity here with Intime and with a couple of other retailers that they've invested in to try to bring some of their know-how, some of their customer experience, and some of their technology, frankly, to bear on the retail sector that hasn't been operating so well. Remember the backdrop here. The Chinese economy is slowing quite a bit. The Chinese government is trying to shift from an export-driven economy to more of a consumer-driven economy. So there's an appetite here for trying to cater more to consumers and give them more of the kind of choices that you would have in, say, the U.S. Retail space.
Yeah, Cory,
I love that line, first deal of 2017. It's the 10th of January. They've already spent $2 billion in acquisitions. I mean, that tells the story right there.
And what does it tell us about the aspirations, of course? Because we are still having this element that you are seeing Amazon dabble with it, Rent the Runway dabble with it. But what does it mean Alibaba wants to become? Who are they disrupting within the Chinese retail area?
Well, I think what Alibaba is looking at is they could be a company like Amazon that develops an idea, throws it against the wall, see if it sticks, and moves on if it doesn't. Or maybe they're going to make massive investments into offline retail. But this is $2 billion of shareholder money. So we should expect some return from this and a lot more to happen with this. Or investors would want to wonder, where's all this money going? Who's getting all of this money? And is it investor money being squandered? We haven't seen substantial results from all of the acquisitions that they've been doing. And at a certain point, they're going to be called to the carpet about that.
Peter, how's it being digested by investors in Asia?
Well, I think the view in China is a little bit different. There is this fast-evolving technology sector, and the primary financiers for a lot of these startups in China is a bit different than in the U.S. You have Alibaba and Tencent in particular, Baidu to a lesser extent, investing in a lot of these startups. So a lot of the deals that Cory is talking about are these investments in startups where they're trying to bet on fast-growing opportunities in, say, ride-hailing or online to offline experiments. So, yeah, they certainly are experimenting with things. In the case of retail and the Intime deal, they're experimenting with some things. But I think there's more of an appetite to try that because the sectors are growing pretty rapidly and there's a lot of opportunity there if the returns take off.